Chris, thanks for joining us today.
Of course.
So, when we got connected, and I think actually we got connected through LinkedIn, I was fascinated by your background. Give us a little bit of flavor on your background and kind of how you got to where you are today.
Sure. The shorter start of it was so I went to Wake Forest and I was a finance major. I kind of did the thing everyone does, and you go to banking, which I did a fairly short stint, maybe like a little over a year. Um, and after that, I was, given this incredible opportunity to join a hedge fund. It was Melvin Capital, and everyone had already started hearing about them, and just all the things they were doing. So I kind of jumped at it, and I joined them towards the earlier side, and I was there for like 4.5 years, throughout kind of the madness that everyone knows, and then also when the aftermath and the ultimate shutdown. The big thing is, while I was there, I focused on short selling, which comes probably a lot into your contrarian element to your podcast. But I was also doing, climate sustainability, agriculture, healthcare, and that sort of formed the foundation for what I do today. I do a little bit of, I would say everything, but it focuses on, sustainable real estate and then more like climate and sustainable oriented startups.
And is that a passion of yours?
It is. It's always been something I was interested in, just the outdoors and just not being stuck in one place in an office. Uh, Admittedly, I did not just like pick climate. It was sort of just not stumbling into it, but it was a space that no one else was focused on. And it seemed to be a growing space in at least like the public sector. And I kind of jumped at that because it was, something that interested me. It was something that I became increasingly more passionate about. And that's what I went after.
So, for the audience, I know you alluded to Melvin Capital and this big thing that happened. Give us kind of like a summary of what happened, in your words. And I know it's common knowledge to some people, but to others, it may not be.
Yeah, so in early 2021, um, the market had just had kind of its bounce back from people being scared of COVID and was on a run, and people were all very excited about kind of the next thing with everyone having all this stimulus money. What most people didn't foresee, including obviously us and Melvin Capital and basically anyone who short sold, was just that in a coordinated effort with people kind of pushing up a stock, it's very difficult for, anyone who has a large short position to get out, because the problem with the short position is you can lose an unlimited amount of money versus if you're just kind of supporting the company and on the long side, you can only lose 100% if they were to go bankrupt. So it's bit like a vicious cycle. Like you buy more and the stock goes up more, and then you buy more again, trying to get out of like whatever you shorted, and it basically adds on itself. And ultimately, in a matter of like a week or so, us included, many firms lost 30 to 50% of their AUM. And they had to rebuild from that, which was not an easy thing.
Sure, that makes sense. And what lessons did you kind of take away from that as an investor, that experience?
I think I took away lessons even before that. So when I started at Melvin and a lot of what I do now too, yeah, I started in like software. Like I just kind of got placed with someone. I was there for like a few months, and then I went to dedicated short selling, which is a niche unto itself, because you're betting against these companies that everyone wants to succeed in most cases. And it almost feels like you're being the police for the market because a lot of them have done really bad things, or people just haven't looked into them, or like the business model's broken. And it's a really tolling job, that side of it, because like to sleep at night, you have to know you've looked into everything. Because
Sure.
otherwise, like you could wake up and like I was saying, like a drug gets approved that you thought wouldn't, and you lose 3,000%. So you just have to be like hyper vigilant in everything you do. And I think to a degree, that whole experience was a bit of like a validation to that. Like there's even more, like people just don't want you to win by betting against companies. Um, and it's a lot. Like it's always been, and I don't short sell anymore, actually, even personally or professionally. Um, and that just comes down to it's really hard to like justify it. Like I think you can win not by going about it that way.
Well, you bring up a good point. I was just talking with an investor the other day, and crypto obviously is full of, where I focus on is full of these bull markets and these bear markets, and kind of what your point is, generally contrarian investors look at what everyone's doing and they're cautious, right? And you're
Mhm.
actually taking that even a step further, where you're saying there's money to be made or an action to be made, beyond
Yeah,
just staying on the sidelines or not entering a space that's popular. There's an opposite side of the market to take. But what you said really resonated with me in the sense of when the crowd is doing something, they become very protective against anything that's opposite of that. So the analogy for me is people that didn't buy Bitcoin when they first heard about it and still haven't, they actually root against it. They don't just, they're not neutral in the sense. And it sounds like you got a lot of that on the other foot, where a lot of these popular companies that you thought were just way too overvalued from a fundamentals perspective, people really don't like you coming in and challenging that, especially if they're invested in the company. There's sort of this tribe mentality where, what I'm doing is right, and how dare you come along and challenge something that could affect me financially.
correct. I mean, you're spot on. Like people don't want you to win when either they're not part of it or they don't necessarily like understand it.
Yeah, and that's such a fascinating mindset, right? And I think I think humans are just wired this way, where once we buy something or own something in the investment sense, but it's probably broader than that, then, it sort of becomes this, it I need to defend it, because I have an attachment to it of some sort. And it sounds like you
Mhm.
witnessed that a lot in your job, and it kind of took a toll mentally on you.
Of course, yeah, I would say it did. And even like you look, even today, like I focus still on similar spaces, but I focus on, the earlier side of it, the like hope and the things that I can foresee that will have a good business model. Maybe they don't know it yet, or like they are part of the future less so than just challenging companies whether or not like they're going to do well.
So
And
what was that transition like mentally, right? Switching from shorting to longing.
it was like overnight. I would say like I switched from dedicated short selling to doing both. And even that alone was a huge mental shift. Like you almost didn't want to go do the short selling because it's so hard. It's contrarian to the extreme. Like sometimes obviously like you can just short the index or like something like simple, but like you're going against like specific companies and you're doing months and months of work sometimes just to be like comfortable in what you're doing. And that was always the case with, I did generic medicine for a while was one that I was doing with shorting, and I was doing renewable energy short before I was going long, believe it or not. And now I only do kind of like positivity towards climate and everything going on. Selectively, it's still, of course.
Sure.
Um, but like, I mean, like the healthcare stuff that I was doing at the start, like things were going really well for these companies, and stocks keep going up, and you're going to bed losing money every night. But somehow you have to know that like what's going on is very temporary, and you can't just like pick and choose what day you want something to work or not, because their business model may be broken, and every year they lose pricing, and there's no competitive moat, and there's just no real model to what they're doing. So eventually, yeah, you're right, but it could be 6 months before that's proved out, and you could lose 20% before making 100. So
Yeah,
it's obviously a hard way to go. And it's nice when you can balance it out a little bit. That's why I was like, overnight, you feel real good when you can balance that out.
well, it's such a different. I mean, I can imagine how it seems to a lot of people a little thing, but it's like you're going from taking companies that want to change the world but probably won't because they
Yep.
just don't have the right formula, and you're looking for that. So it's like you're looking for the dreamers that aren't going to realize the dream, to now you're looking for essentially the dreamers that you think will realize the dream, and in some
Hmm.
way, indirect if not possibly direct, depending on how active you are as an investor, you're helping them do that, where it's almost the opposite when you're shorting. And I would think mentally, and from just a like satisfaction of work perspective, I mean, I've come from venture. So every company you invest in, you're trying to, you're literally aligned to make them successful. You pass on a lot of companies, but you're not like actively, making money if the companies you pass on fail. So it's a very different, it's a massive transition, actually. The more that we think about it and the more that I talk about it with you, the more I'm realizing how different that would make, getting up in the morning and, you're not looking at the companies you invested in and rooting against them. You're now rooting for them.
Yeah, you get, I would say, like I got numb to a lot of it. And like all I could focus on was what I was doing. And it was just like I would never miss, like you don't miss anything when you're like that, and like you're so focused on what you're doing. But like I would say it took a it took a year, maybe two, between the whole short selling to like doing just both longs and shorts, and then another year before I do what I do now, which is more just like straight kind of positivity and venture and different things. And it didn't happen overnight, and the way I even approach investments today is probably more selective than any person known to man, because like I just don't know how to not think like I once did, and to
Yeah,
like
tell,
just
tell us more about that. What's your process today, and how has your past, kind of resulted in what it is today?
um I would say there's like two sides of it. So one side of it is I can be more quickly decisive than a lot of people because I know what works and what seems to not, because I've been so exposed to what does not. So like I've done things like I'm invested in like a baby bottle company called Bub or Group B Labs, and I think I did maybe a day's worth of work, spoke to him, and I was invested. But like everything about it, like in the way I thought about like the moat, the competition, the model he was running off of, his background, kind of how he's being supported by the government, like all these things just like check boxes in my head that's like this will work. And like it seems to be working for him. But at the same time, like between inbounds, outbounds, and conversations, I probably go through like a couple hundred before I pick one, because for some reason I can't get over like when one thing or two things are wrong, because that drop is from the days of when like what if when I was shorting something I was wrong or right, and like it fails because of that one thing.
Sure.
And it, like I've passed on a bunch of stuff earlier and then gotten involved later. Be it like it tends to be in like the green or renewable space, like different sorts of windmills and power, like engines and turbines and different things. But like at first I was like, well, like it's expensive. Like that was the only reason. And like I think I held a very narrow view from my days back then. I was like, the economics will never work. Then they get bigger and like somehow it did. And like there's a lot of reasons for it. But now I am invested in those and like I wish I had prior. So like my background unfortunately has hindered some. But I think generally speaking, because it's so unique, it tends to help. And I often get the feedback that I'm a little bit overly direct where other people are not, like dance around things. And it just comes down to like I'm just so used to the you have people for 10 minutes and like that's your time to pitch, and like the public market similar to like crypto, it never really like shuts down. It's open almost every day. Like things are like mark to market. Like you need to make your point or you lose someone.
Yeah,
So
I would think also you'd have a luxury being long of a longer investment horizon, right?
correct.
So you get to think longer term. I mean, like in venture, obviously you see this all the time where early stage companies, they may really struggle to figure out their formula for a year or 2 years, and then
Yep.
suddenly it's an overnight success story, which of course is not overnight.
No, it's not. It's a long tail, right? The success happens at the last second when they get that partnership or whatever, or they get into the store they need to be in. And then like they're selling off the chains. So
Yeah. How has the GameStop situation affected you?
Um, I mean, financially, like you get hurt because like the fund's down. Uh, mentally, it sort of validated a lot of what I thought about short selling in the sense that like the risks are almost unknown, like
Right.
not even like related to fundamental. It just seems like you short things and like the world seems to think that that's the problem. So like mentally, like I wasn't specifically involved. That was like a different team, different like people. So like I was not like the day to day person being like trying to do analysis or justify it or whatever it may be. But at the same time, it wasn't like I wasn't sitting into the conversations of just like how today was and how we're changing things and whatever it may be. But I think more or less it validated a lot of what I thought about short selling. And like, I think the unfortunate thing is someone else will always short sell. And I think that there needs to be that like police to the market because I don't think people do a good enough job watching companies who aren't ready for
Yeah.
being public. But it will not be me.
Fair. Um, I think there's a lot of people that are curious about what it's like to work at a hedge fund. Hedge funds are sort of, when you're in the world, it just seems, your place of business where you go to work, it seems normal. But I feel like hedge funds kind of have this mystery and intrigue surrounding them. How would you just summarize, what it's like to work at a hedge fund? And how would you contrast, your average just retail investor that dabbles in stocks or something? What is like the difference in expertise between them and a team that's working at a high performance hedge fund?
Yeah, I would say like what it's like to go to work is every day is different because the markets are ever changing. However, depending on how like the model is run and how most hedge funds run is like each person is a specialist in a certain number of names. There are some where it's like you're kind of just broadly you have five names to look at and you're looking for new ideas, but most will be a specialist in an industry and you're coming in and you're kind of making some recommendation on the day based on the news and the stuff that pops up overnight or company announcements, or you went to like a sit down with the CEO or whatever it may be, and you got some perspective from him. And by perspective, I mean just like the way he answers questions, because you're not getting like MNPI. It's just like you've met him five times and he seems a lot more cautious this time around.
So you
So
have direct
you
interactions with
you
the
have
management.
direct interaction with like the C-suite. Then you have the analysts who work for all these banks who also have interaction or doing like ground level analysis. And you also have a ton of data on top of that from whatever third party is either scraping or like out there on the ground trying to get like information, like visiting stores or like talking to suppliers. And I would say like the biggest difference is like, look, like 4 times a year when they report earnings, you're looking at the exact same companies, like updating your models at a minimum those times. Speaking to the company like a minimum 4 times a year. Like, so the biggest difference between us and or like the hedge fund space and the retail investors, like access, data, and just the ability to constantly look at the same names over and over and over again.
Yeah, you guys are in it 24/7.
Correct.
And I don't think people really, I've experienced this myself. There's like this theory, right, that you need to know enough about something to really appreciate what it's like to be an expert. So, for example, me and you watching a basketball game, if we know nothing about basketball, it looks like a very simple, easy game to be good at.
Yep.
It's just put the ball in the basket, right? And you have to kind of spend probably 6 months to a year playing and learning about basketball to even realize how far you are from the people that are at the top. And I feel like it's very similar investment, especially when you're talking about
Mhm.
niche investment or alternative assets or shorting or something like that, where people they think they have like an idea, but the truth is they have no idea.
Yeah, I mean, I would already be exposed to a space for like a year, then pick up some new name which we wouldn't invest in. I would cover it for 6 months to a year, and then maybe we would get involved. So I'd have the background of an industry plus another year worth on the company before I actually make any actionable, probably investment expertise on that specific name. So like
Interesting.
it's not like I'm researching it for 2 3 months, and like some firms will do that and then just like make an action. And even if we said no, we'd still cover it for years. Like there are things that people wouldn't cover, like just watch and just wait. And that was just the case. And it depends obviously on the industry. Like the climate side of stuff, I mean, like no one gave a crap 5 years ago. Like I
Right.
think I was like one of the few people who were focusing on that stuff. And I mean, it was on the short side because none of the businesses made any money. Were focused, like the government didn't care, people didn't care, and then all of a sudden, like COVID rolls around, and the best thing that ever happened for it.
Yeah, like Zoom. You just happen to be in the
Yep,
right place at the right time. Yeah, you need a
agreed.
little bit of luck. What was in your like? What was your childhood like that led you to finance? Do you think? I mean, did you know you wanted to do finance from an early age, or were there things that, looking back, gave you kind of a hint that you'd be good in this sector?
I was never good at school or really math, but math with a dollar sign seemed to make sense to me. So
Pun
I knew
intended.
I would probably do something with business.
Yeah.
And then I think I just took a finance course and was just exposed to it while at school and different things. And I was like, I think this is like the highest exposure to the stuff I understand. Um, and that kind of drove why I ended up in it. It wasn't like like my parents don't work in finance. Like I don't have much exposure whatsoever beforehand. By like a finance class, it was like home economics was my finance class. Like, can you balance a checkbook, open a bank account, like that sort of like very similar, very simple stuff.
Yeah.
But the fact that that made sense, I was just like, it seems to be something that works out. Like, I might as well just like try it.
Yeah, that makes sense. When you like go home and you have like that family dinner and your family's always, I don't know about you, but my family still kind of is grasping what I do because they don't have the
Oh,
finance.
they have no idea.
Yeah.
Absolutely no idea. They still don't. They just they're happy, you know, that like you're not asking them for money like their friends' kids.
Right.
That's like what my mom tells me. She's like, well, at least you don't ask me for anything. I'm like, okay, that's fair. But at the same time, like they have no idea.
Yeah,
Um,
that makes sense. And so how does that affect, yeah, it's really interesting. I mean, that's one of the things that I have encountered a lot, and I think is pretty common among investors, but
yeah,
definitely contrarians, because you just have to be so in the weeds. And it's almost like there's almost service level stuff to talk about, but you can't really go deep very easily
yep.
because there's just not that foundation there.
Yeah, they bring up the stock market, which they don't really know how it's doing even, but they'll bring up the topic and see what happens, sort of thing.
Right.
But I don't know. I think like trust but verify was learned pretty early, like just because, you know, it's you go to school, you do all these things, and something that always came. I think I like got burned probably when I was like younger and in high school or friends or different things, and that always kind of just stuck with me. Just like make sure like whatever someone says to you, like you do it yourself, and know exactly what it is, because that then fell into, you know, when you go to college, like you make sure everything's done right, and the whatever the people like the guidance counselors that actually did what they said they were going to do, because half the time they don't. It's like then you get into college and it's like then you get a job and you're looking at it like, all right, like basically my job now at a hedge fund is to trust but verify, because these companies are trusted, but then when you verify it, things just don't add up. Like somehow like they own like a house here through their business and you're like, wait, what? And then it just kind of goes from there. And then things obviously come out. But I've never been like, what do you call it? Like an activist short seller, like the
Hmm.
people who publish very public condemnations of companies in attempts to influence the way it goes.
Right.
It's always been like that was I've always been, when I was a hedge fund, like a very patient short seller is what I would call it. Like just let the earnings kind of reveal themselves, let the analysts on the calls and the investors ask the questions and get answers that maybe aren't what they were expecting, that sort of thing.
Yeah, I don't know about you, but I think I've really learned, and I think you have to as an investor, but I've really learned to embrace this idea of, what defines a correct decision. And so many people think a correct decision means that that decision was profitable or it ended in the way I expected. So, for example, I get in my car, I drive to work. If I get in my car and drive to work one day and I get hit by another car, then that was a bad decision to drive to work that day. But it's like, but was it? I mean, because the alternative is you never drive to work or you never go anywhere and you never
Yeah.
take any risk. And the truth is nothing's 100% hit rate. So, you were saying you've got to be patient. It's like, one, you have to be patient, and two, you have to understand not all of your positions are going to work out. And that's okay, because if you feel like your methodology is overall profitable or has a high EV, then it's still the correct decision, regardless if that singular decision didn't work out the way you wanted it to work out.
Yeah, I've struggled with that, at least on like the real estate side too, because a lot of what I do is like I'd call it like redevelopment, but it's not really redevelopment. It's more like unique opportunities where like there's something that can be converted into housing or whatever it may be. And like sometimes I do make a little bit of money, but then I'm like, well, that's all great, but like I added affordable housing to a community, or like I add like there's more to a decision sometimes than just like knocking out of the park. Like
Sure.
those are good too. But I think you get to a point where that's not solely gratifying. And there needs to be like something more, which is I think why like I also stuck with kind of climate and sustainability and different things, because it at least feels like I'm making an advancement to something else, even though like it obviously still is a business. Like you still have to support yourself. You're still like trying to do good.
Yeah, I think ideally the idea is you support teams and technologies and businesses that are trying to change the world for the better, and the ones that are successful, you'll help share in the economics of that, right? So you'll benefit
Yep.
from that, but you're also getting a personal satisfaction of supporting initiatives that are trying to do something better overall.
Yep.
And I do think that, I mean, that's what actually drew me to, when I was entering finance, that's what drew me to venture capital. Is it seemed, the proposition was, we're going to grow the pie as big as possible, and therefore everybody's ownership is much more valuable, versus this idea of like, we're going to try to get as big a piece of the pie as possible because there's only a limited size here.
Correct. Yeah, and look, like if you share in the economics, then put that back to work again in other companies supporting the same thing or something else, then it's kind of like the flywheel of not positivity, but just like positive reinforcement in what you're doing, which I think is one of like the ways, at least I define kind of success.
Right.
And like there are other parts to it too. Like I think like flexibility in what you do is often like a true way to think about success too, because like when you're so attached to like one thing, like I was saying, like you get kind of numb to everything else, which has like a detriment on like mental health, and it has a detriment on like, am I morally doing the right thing? So like being able to diversify your time and focus on many things, but still be an expert in like a few that you enjoy is kind of what I do now. Like I focus on real estate, VC, and like a bit of farming. Like that's about it. And like
Right.
I'm happy with it.
We're kind of at a crazy place in the world right now. What are your contrarian views currently?
The one in my space that gets the most flack is that there is such a focus, for example, on climate tech software, but there's no hardware or infrastructure yet to run it the way people think software is on like computers. Like people forget that like the computer came before like the 20 HR softwares that exist today, and there's a space for all of them. Like there's just, and in my views, like it's a little too early also like for how much interest there is in like climate. Like it's great that there's so many people out there supporting it, but it's very up and down. Like I find that there's more interest when like oil's at a high price than when it's not. And I'm like, they're not that interested if they only care when like half the time. So I would say like that in my space. And then I think I also have the contrarian view that like the whole interest rate environment and people blaming it for everything that exists is probably the wrong opinion. I think they should first, I think either there's a personal stake, like they want to buy a house, like secretly tends to be one of them. But I think the reality is just like, I think it's not always going to be like the perfect environment where everything goes up. Like you need to start thinking about investing at all periods in the cycle in all kinds of environments, and the good companies will be okay when rates are high. Like they will find a way, or like they will make the cuts. They will, have a model that's more sustainable, like the shifting focus, which you see a lot now. Like I don't. Do you still do a lot in VC or no?
I mean, I'm active in the sense of mentoring companies, doing active investment. I mean, my view is crypto in the liquid markets is
Okay.
VC, because you're still investing in companies that you're really betting on what they're going to build, right? So
Right.
it's not the business that exists today. Often there's not really a business. A lot of these are pre-revenue, and there's a token model, which is sort of like this unique kind of angle to look at it. But I mean, a lot of these companies would be Series A, Series C, maybe Series B or C companies if they were still private, right? And tokens have just allowed this, this liquidity component where they get kind of shuffled in this different perspective, which I actually think is bad. I mean, I think, people are always shocked when a coin drops 20 or 30% in a day. But if you've ever been in VC, I mean, if stocks were priced in
Here.
real time in privately held companies and, you came in and you're the CEO and you said, we just lost a big deal, you'd see this similar type volatility occur. So I think what I like about crypto, and I've set my expectations on this, is that it really is a way to flex your VC power, but also have this optionality of liquidity, which is kind of unheard of before, the crypto asset class. But I still do a lot of like talking. I still work with a lot of entrepreneurs. I still enjoy it quite a bit because I've always been drawn to people trying to do big things and trying to change the world. And usually their head's in the right place more than your average executive, which is more profit focused. I find that to survive in like, startup world or new company world, you really have to, like what we've been talking about today, you really have to have kind of like a higher purpose that's driving you, or you just won't survive.
Yeah, no, I'd agree with you. I mean, what also drove me into VC was when I started looking at companies when I was at Melvin and we were a lot smaller. I was looking at a lot of stuff that had like come public too early,
Right.
because obviously VC was a different kind of world. Like things that were good were obviously sticking private a lot longer, but things that weren't kind of get desperate for money. They go public and they kind of take that bet and they can raise more money, obviously, with follow-ons and different things. But I was looking at companies and speaking to founders who like wanted to make change. And as you get bigger and like you're still one person, but have 3x the money that you have to deploy, like you're talking again to the people you were saying, the executives focus on like next quarter's profit and like talking about like, oh, this one facility, if we cut this, like it'll be great. And you're like, okay, that's true. But like, what did you change? Like 100 people lost their job and like, great. Like, I don't really see the point. And that's a lot why I kind of made like an active transition to like focus on people who like want to be the change and like make the change you see in the world, not are focused on like how do you just kind of become complacent and move forward, because those complacent companies tend to be the ones that ended up getting shorted.
Yeah, I mean, you bring up such a good point. I would love to hear your experience with this, but we've both interacted with a lot of executives. It sounds like in our career, and the executives I've talked to that have gone public, they never really enjoy it. And I think there's just something with running a public company where it's a really hard position to make those bold moves that may put the company in a slightly worse position from an income or balance sheet perspective over the next few quarters. But long term, they'll position the company for success, or you'll be able to help a lot of people or drive a lot of change in the sector you're in. It just doesn't seem like a conducive environment for that because shareholders want every quarter the stock to go up, no matter what you have to
Mhm.
do. And if you're bold, even if you're bold as a public executive and you're like, no, we're going to like focus on the long term vision, I mean, you might get removed, right? So it's like you may not even be around to drive that vision to completion. And I mean, I think this is why a lot of startups are staying. One of the reasons why a lot of startups are staying private longer is it's just such a different ballgame.
I would 100% agree. Until they can't stay private, they do seem to stay private. Because it's much like the only thing you see, I think, on the private side at least, is like there are some VC funds who lead around, and then you hear from like the executive that they're like, they wish they never picked that VC because they have a million asks and they are just like being a public company.
Yeah.
But outside of that's like 1 in 10 or something. Like it's not very common at certain firms and like whatever it may be, but they're also the ones driving the valuation and different things. So like it's all a matter of choice, and people usually know what they're getting into. I hate to say it, but when you're a public company, it's like not everyone has like is given as much bandwidth as like the Elon Musks and like the Tim Cooks and like the people who make these huge changes in companies, and the investors give them time to see what happens, like forced disruption for like the better good of their company. It's not like you can see that at like an electrical utility company who's just like trying to, beat and raise and do the same thing every quarter. And I think that you find, at least as like a contrarian investor, much more like you feel more at home with the people causing more disruption, despite it being disruption, because you're like, well, at least they're doing something about it.
Right.
Like they're not like, but at the same time, like they could be removed depending on whatever share classes and tons of like little nuances, because things take time. Like the bigger you are too, like these public companies are 20-30 billion dollars when they're in the S&P half the time. And then it's like, how do you actually move the needle? Like you make a huge acquisition, your company probably the starts tanking for because no one even knows what you just bought or why you bought it. And it takes 2 years before people are like, oh, wait, that makes sense. So it's not easy to be a public company exec. And then you have to deal with people like us at the hedge fund asking you a million questions and being on the road marketing and all these sort of things. And it's a different ball game. So like I would 100% agree. And the people who are private seem to use that as definitely like an advantage. You also come across a lot of like shy CEOs who have great ideas but would just not be will not be like a public company CEO.
Right.
And I think they know it.
Yeah, well, I mean, I think it's a function of, like we talked about, really just how often are you valued, right? Does
Yeah.
valuation occur? So, a private company, right? They're usually just valued at when they raise their next round, especially in the early days of the company. And so it's kind of like you have a year and a half, 2 years, give or take, as an executive to show that what you're doing is driving value or increasing, you
Mhm.
know, gains to the shareholders. And so, you sit. I mean, I've sat on a bunch of startup boards, right? And you sit on the board, and the executive tells you what they're doing. You're like, great, we're going to get to see how this works out, but we're not going to really see from an economic standpoint in the sense of to the shareholders for a year and a half. So
Mhm.
you've got some time. Now that can work against you too, right? Like if you've been going the wrong direction for a year and a half, and even if you knew it, you being the executive, it doesn't really come to light for a while. But public companies, they have to wake up, the executives have to wake up every day and, like we did everything right, but the stock is down and therefore my job's in trouble. Or, people,
Correct.
the board wants to talk about something and it's all driven on that share price.
Yeah, I think I hate to say it, why I run a lot. Like, I haven't taken outside investors. Obviously, I invest in like VC and alongside people, but at least when it comes to like the stuff I do in real estate or stuff I own outright, like, I've been very hesitant to take on outside investors because some of the stuff I'm doing, I know they wouldn't be as comfortable as I would be when they think about risk. Like, I might invest $500,000 in a building before it turns profitable and is worth more. And people are
Right.
sitting there like, that was 10%, 20% of the building value. Like, and you're okay with that? And I'm like, yes. Like, I'm very like convinced in whatever view I have. And like things have worked out very well. But it's again, like people are just like, are you sure? Like this is the right decision. Like no one before you did this. Or like no one took this like step. Like this space has been empty for 50 years and you want to do what?
Yeah.
So, like, you want to make it into housing? Like, I don't even see how that fits. And I'm like, don't worry about it. Like, I'll worry about that. Again, like, it's still your money or decisions. So, it takes time, obviously, like you were saying, to like see things play out. But it's tricky when you're like, oh, like, should I take investors? Like, that means I have to take less risk and or be more calculated and communicate differently how I'm taking risk. On at least like on probably on your point, but it's definitely like a balance that you have to find. And that's also why like I do multiple things, because I'm a little bit afraid, obviously, from like my Melvin days. And why I got into real estate was I was just afraid that like things wouldn't be good forever.
Right.
And I was probably one of the only people who had that view. And real estate was the one thing they would let us do. And that played out pretty fortunately, because obviously like the fund goes down and like it never really recovered and things evolved. Um, but like I was okay. Like I didn't need things to be up 50% every year.
Yeah, it's so ingrained in humans that when you're doing something everyone isn't, you start to
Mhm.
really doubt yourself, right? Like, so if everybody starts, I've observed, I don't know if you've ever observed this, but if everybody starts to get in line just for anything, but let's assume it's a restaurant, people start to get in line, right? Even though they,
Mhm.
and then they'll be in line and what are we in line for? Sort of deal. And I've found that whenever you're investing in a sector that is just not popular, like you mentioned, this building, nobody's investing in that space. I actually think the hardest thing to deal with is the noise, like the common
Mhm.
voice. And often it's a very uneducated voice, is the irony. So, when you're acting contrarian, you're forced to have a robust thesis. Like you're forced to really think through, why am I doing what I'm doing? Unless you're just being a contrarian for being a contrarian's sake. And when you talk to a lot of people that are doubting you, you realize that they haven't put a lot of thought into their doubt or their dissenting or opposite point of view. And I found, like, for instance, in the last bear market, when Ethereum got down to 100 and I was buying as much as I could, the thing that kept me from buying even more was just it was getting so hard to find anybody that still had conviction. But then now,
Mhm.
as I reflect upon it, I realize, well, they didn't have really an educated viewpoint in general. They just saw that this thing was going down. And so it was kind of this confirmation bias. Like I was always skeptical of it and the price kept going down. And so it's reaffirming that I'm right. And it's really hard to cope with that. I wanted to ask, what are your favorite ways to cope when mentally you get kind of burnout or stressed or you're encountering that in your world?
Yeah, I would say I definitely take a break from whatever it is, and that's probably not always the best answer, because then things could get worse while you're taking a break. And by a break, like I'll like take a hike, or like I'll walk my dog, or like depends how long I have and what needs to be done. Again, like I try to get outside and just like fresh air, different environment, something that you can't control, but in a good way. Like you don't know what you're going to encounter, or who you're going to run into, or like how like the weather is going to evolve, or whatever it may be. And it's always good to be kind of reminded that like things are out of your control before you come back and like rethink or like confirm your contrarian view, or do more diligence, or whatever it may be. um, and I think that's my first coping mechanism. And then the rest is just like being around people who may or may not know what's going on, because that at least like distracts you and just like gives your mind like time to not like, be so focused on maybe something that doesn't matter, just because like herd mentality, like your point,
Right.
like it's herd mentality or like crowd mentality on the way up. It's confirmation bias on the way down. There's like tons of ways to like say it, but if you're like a contrarian, then like you're doing the exact opposite. Like you're like your point, you're buying it on the way down. And you're like, I don't know, and it's tough. But I'd say those are my like my best ways to do it. I don't have like a perfect answer for it. And like I think it just depends on the situation. Why? What do you tend to do? I think you deal with it more now than me. I feel like crypto is more wild than what I do.
I think the more experience you have, you get more confidence in the sense of, I believe that statistically my methodologies are going to yield positive results. And I've been through three bear and bull markets. And besides like the price, I actually think that bear markets, they're much more enjoyable to exist in.
Mm.
In bull markets, I remember getting in taxi cabs and every taxi cab driver telling me, "Have you heard about Bitcoin?" And I was playing poker one time in Vegas, and all the dealers were asking me what coins they should buy, and you start to feel, weird. It's weird. It's like this thing that you have conviction of. Now you're almost cautious of because you're encountering this opposite problem where now it's no longer contrarian, right? You are
Yeah.
part of the crowd. You may be an independent thinker that was you may have been there before the crowd got there, but now you're there with the crowd. And so for me, it's a lot about just having my macro thesis written down and why I'm doing what I'm doing. It's also a very quick recognition. Like when somebody gives a very sharp opinion, like crypto's a scam, or renewables energy is a scam. uh, I just ask why a couple times, and I can very quickly tell if somebody, if what they're saying, how much weight I should put on it. And it's not that I'm looking for someone to say what I want to hear. In fact, I love talking to intelligent people that have opposite perspectives. But the question is like, how much meat is there behind your opinion, right? How much thinking did you really do? How much do you even know about this industry? Um, or are you just kind of regurgitating what the news has been telling us? Which, of course, the news is a business. It exists to say whatever will get the most attention, which is almost always negative, right? And I'm sure you've seen that as well. It's like most people just turn on CNBC, they see what's hot, they see what stories are coming out, and they massively form their opinion based on that.
Yeah. It's like also separating like the bad actors from like the space as it exists. Like obviously you see it like FTX, right? The worst actor possible, but like crypto is not a function of just FTX and what he did. Like it's the same as a lot of these companies. Like just because the CEO is like used to be a fraud and did this and did that, it's like the company's not necessarily bad. He probably just lied in his interview and like did a bunch of stuff. Like sometimes the people, not necessarily like the company or the idea or like the whole space. Or one
Yeah,
company failed doesn't mean that everyone's going to fail.
right. I mean, it's kind of funny. I remember when FTX was happening, I was on a plane, I think to Miami, and I was watching The Smartest Guys in the Room, which is about Enron. And I mean, I swear, Chris, you could have just blurred out the word FTX and inserted Enron, and it
Mm-hmm.
was like 90% of the stories the same. And of course, nobody's conclusion about Enron was, energy trading, energy derivatives is a total sham. And I think it's important. I have investors I talked about this, and it's part of the reason I started this podcast. I think crypto needs a better voice, right? It needs better PR because news outlets love to talk about the things that went wrong, and they're kind of giving this perspective like nothing's actually getting built of value, and there aren't a lot of smart people trying to solve things that would benefit the human race. They just kind of highlight these bad actors, but those bad actors exist in every industry, right? There's Madoff, there's Enron, there's it's not a new, like, the idea of fraud or bad CEOs or companies doing negative things exists across the board. And so to just focus on that, I think is really missing the opportunity. But of course, the fact that those things are so prevalent means that the opportunity is even greater for those willing to see past it.
Yeah. I also love markets that are not bear or bull and just like kind of focus on companies as they sit and are and whatever it may be, because then you can focus on the stories and like understanding why a company wants to exist and like if it's good, not just because, oh, it fits in one bucket in this space and that's why it's going to be great. And you're like, did you even diligence it?
Right.
Like just because someone else did the work or like you assumed someone else did the work, let's be clear about that. Like
Right.
they might not have done the work. It's just like it was hot at the time or like like you just don't know their process, right? So that comes back to like why I always like verify and I'm so diligent about everything I do is like obviously it's my money, but it's also just like I want to feel comfortable that if I'm not all over it every single day, like I was with the hedge fund, like I'm okay with what happens. Like I understand there's volatility, but no matter what, like I believe in the story or I have some sort of idea of what the company could be if like they changed some things and evolved and like moved forward. But it's definitely like hard. It makes me more selective almost because there's no liquidity. Like I can't just be like, all right, I'm out, peace. Like it's different. It's very different.
Well, I mean, I love that I mean, look, I resonate the same way. I always have read every legal document and, a lot of work that other VCs or investors would assume got done by another smart entity, like, oh, Google Ventures or, oh, so and so is in this deal. So we don't need to worry about these nuances. And I think when you're there on the front lines and you witness that, it teaches you these valuable lessons. Like, I remember deals where, some term got through that was very unfavorable. And then there was this whole, well, why didn't you catch it, law firm? And it's like, hey, like we're a law firm. This is a business term. Like we just made sure that it was correct from a legalese perspective. And so I
You don't
just
get
found that
sued
to
for it.
assume that
That's
nobody has done the work versus assuming that the work has been done. Like, what's the disadvantage of that, right? There's very low risk in the sense of, yeah, you're going to have to do a lot more work yourself, but you're also going to level up doing that. Versus if you assume people did the work, one, you miss on leveling up by doing the work yourself, but two, it just puts you in this very vulnerable situation. And you don't want to have to explain to an investor, we should have looked at all these things, but we thought somebody else looked at all these things. It's like, that's not a good conversation to have because the investor's like, well, that's what I pay you for you to do
yeah,
it.
of course. Or it's like, oh, I could have paid someone to look at it because I didn't really understand, but I didn't. Or like I could have just asked my friend, but I didn't.
Right.
Like it's good to do everything that you can possibly think of. And what I'm probably most happy about is like how fast deals were getting done when I started doing this and was coming out of like the hedge fund and different things where it was like, oh, like in 3 days, everything has to be done. Like I would kind of just like back away.
Yeah.
Like I can't get it done in 3 days. I'm one person. Like I can outsource some stuff, but I'm not sure, for example, I'm going to be comfortable with it. Like that's the unfortunate piece. But at the same time, like I'd rather not miss something and be happy with whatever deal I do. And like my view is just so strong that I'm okay missing the ones that were like slipped by because they went too quick or slipped by because like I couldn't understand something and they just had no idea and like it just seemed concerning. Like one thing that you're just like, I don't know. Like
Right.
it's a whole like, can you sleep at night? Like, are you so set in your ways?
Right. Well, listen, man, this has been really fun. We're going to wrap it up, but, I feel like we look at things the same, so it's been a lot of fun jamming, and thanks for giving us a peek into your world and what you're up to now as well.
Of course. Thanks for having me.
All right, talk soon, Chris.
Yeah. Bye.
Cool.